This is the Mike and Mario show. It's December 31st, 2021, Friday, of course. Uh, Hi, Mike. How are you?
I'm doing good, Mario. The last
Good.
episode of 2021. Excited to be back
Yeah.
and looking forward to connecting
You
with
know,
you.
2022 rhymes. I saw a meme the other day. It's 2022. You know, it's like
2022.
2020. So let's hope that's wrong. But anyway, let's get to business right away.
All
And
righty.
I wanted to talk about commodities uh, because just like transitory inflation, there's a lot of people who think commodities are going to go back down.
Mhm.
And I wanted to cover a few charts here today just to show people how commodities are actually, well, they haven't gone up all together.
Mhm.
But for example, here's lumber. Lumber, beginning of this year, went through the roof. It went to the moon, I guess, back in May, and I think that was like forecasting higher prices for everything.
Mhm.
And why is that? Well, because lumber is something real, something from nature that you can't create out of thin air,
Right.
that you need to like cut the trees, you need to, there's work involved in getting lumber
Mhm.
processed. And then over here, like, for example, I think the guys at the Fed were pretty happy. They're saying, yeah, lumber's come back down, inflation is transitory. But now look at lumber now. I think it's almost like like Bitcoin. We could see it go back up to the old highs. And it's not just lumber, because we could say, oh, this is just lumber. But
Mhm.
if you look at the other commodities, for example, coffee, and these are all weekly charts,
Mm.
and this is going back over 10 years. So you can see here we're testing some pretty high levels. Yes, it's come back off, but the trend still looks higher. Let's have a look at wheat. Wheat, the same thing.
Yeah.
We have come off, but it looks very bullish. Cotton as well. All things that are real. Cotton, as you can see, we broke through this level here, was just below 100 cents. And yeah, we are really bullish. I think this is showing the weakness in the dollar.
Yeah.
And some people might say, what do you mean weakness in the dollar? Well, because it takes more dollars to buy all these things. Let's have a look at copper. Copper rose earlier this year as well. I think it was around May time, just like lumber. And it made an all-time high. And it's just been consolidating here. And to me, this consolidation just looks like a breather before it goes back up. So there's copper. And we've seen also gasoline, WTI crude. This is a very long-term chart, as you can see. Earlier this year, we broke out of this key trend line. We
Mhm.
went up to like 85. It's come back off. And if I zoom out here, it could be forming a head and shoulder here, but I think it's going to go higher.
Yeah.
Um, and then a lot of you probably asking about gold and silver, what we think about gold and silver.
Mhm.
We were talking, of course, prior to
Yeah.
coming on about the fact that gold and silver have gone sideways and slightly lower this year. It's been kind of disappointing, but at the same time, it's given people opportunity to stack. And I told you that I went to play golf this afternoon. I played a few holes, and it's winter here, of course. A few weeks ago, it was freezing. Today, it's like spring,
Mm.
really warm, relatively warm day. So even during seasons that are supposed to be, uh, let's say, cold,
Mhm.
things don't go. Nature is not perfect, and I
Right.
would say markets are not perfect. And I showed you. I'm going to share now another chart
Yeah.
here of why I think gold and silver, they, the fundamentals are still very good for it. And it's the national debt, as you can
Mhm.
see here.
Yeah.
This chart of the national debt versus gold, the correlation. Some people might say, oh, that's broken down, but this is in 2017, so gold was just above 1,000 here, and the national debt was about 20 trillion, and
20.
yeah, 20 trillion. Now it's 30 trillion. But if you look at prior to the 2011, for example, they were going up. The national debt, the debt limit, they're going up like in lockstep.
Mhm.
And it's been since 2013 that gold kind of detached. But as we know, gold right now is 1,800, so it picked up. It filled that gap, but the debt is growing a lot faster. So you could argue that gold will eventually go to 3,000 because the debt is at 30,000, and it
Mhm.
looks like for every thousand billion or trillion, gold goes up $100, so to speak.
Mhm.
And so let's say, I'm not saying gold is going to 3,000 in 2022. I think it will happen. It's difficult to say what year it's going to do that. I think it's not going to be 5 years. It's going to be maybe 1 or 2.
Yeah.
And let's say if silver goes, gold silver ratio goes to 30-1,
Mhm.
like it did in 2011, you could argue that silver could be at 100. So that's how I see silver and gold and the
Yeah.
commodity as well.
Yeah. And that's one of the things where, moving into 2022, nobody can plan out anything perfectly. Even the manipulators of this entire experience, they can't even do it correctly. So I think that we're just have to wait and see how things plan out. But in the meantime, it's a buying opportunity. It's the best position to be in, I think, heading into 2022 with silver and gold still being at the prices they are, because everything around us has been inflated up except those two. And that's intentional. I did a video earlier talking about how gold and silver clearly is the kryptonite towards the evil system orchestrators that's trying to do their best to make sure people do not go in that direction. So I'm not looking forward to gold and silver taking off,
Yeah.
because the rest of the world around us will probably be not too pretty. So I can do without it for now. I think buys more time. But anyway, for those tuning in, definitely throw out some thoughts or ideas or some questions. We'll jump on those. Last live stream of the year, we got a couple articles worth touching on, just to shine more light as to what we just went through and possibilities of what we're going to walk into 2022. And one of the things I wanted to touch on is that the whole idea of price controls. So it looked like that's going to be something that could be thrown out there. And so let me pull this article up real quick on my side. And so just this week, an economist from a university here talked about the need to look at as a possibility strategic price controls to get ahead of the inflation that the Federal Reserve and the government is responsible for. So Mario, it's never worked in the past. It will never work again in the future. But why and how will they try to pull this off, you think?
Yes, I saw this article the other day. Isabella Weber, she's from the
Yeah.
University of Massachusetts, Amherst. She's basically a Keynesian. She gave the excuse that during World War II, they had price controls, but it wasn't a free market economy. It was a command economy during the
Mhm.
war. In a free market economy, she's arguing that profits create inflation, which is
Right.
ridiculous. Uh, we know that, but
Well,
what happens is the reason why it doesn't work, and if she had read some economic history, she would have known that. We look back at the fiat money inflation in France during after the revolution. They tried price controls on the farmers and agriculture in France, and what it does, if you put a cap on prices for producers or farmers, if it costs, let's say, $100 to produce something, and you put a price cap of $90, what's the point of producing something that will
Right.
cost $100 to produce, and you're going to lose $10 selling it?
Right.
So what that does, producers will they'll
Close.
stop they'll
Yeah.
stop producing. They'll go on strike, and what that does is creates even more shortages.
Right.
I think Richard Nixon tried to do that in the early 70s when inflation started picking up,
Yeah.
and we know how the 70s ended up. It didn't work.
Right. It creates more price distortions because it's the breeding grounds for black market style economies, because manufacturers will no longer stay in business. So they're going to either, try to work around that or just completely go out of business. Therefore, there's going to be more incentive to probably keep your products and sell them directly into the market themselves on the black market side of things for profit. So it's going to create more distortions, less jobs, more issues that they're calling themselves trying to prevent. So it's I don't think they're going to actually get to that this year. I don't think, though, just because I keep highlighting the possible 3 events I'm anticipating. Some type of market correction. We got Elon Musk talking about a recession. Everybody talking about recessions coming in the first quarter or 2 this year. Then we have, of course, a cyber event, and then we have the war drums beating like never before, with Biden talking big to Putin as if Putin really gives a damn. And then there's always some type of false flag that could come out of the wind that we don't know about. So I don't think we'll get to the price control side of things just yet, because I'm expecting some major catalyst before summer. That's just me. Don't know what it is, but it's going to definitely cause a major hiccup in their game plan. So here is a Vince Grant. Appreciate you, my friend. It says, inflation will eventually end. How does the world look when it finally ends? I see deflation coming in Q2 of 2022. Okay, inflation will end. Vince, elaborate on that for us a little bit more, because with the continuation of the currency creation, I don't see prices actually heading down permanently the way that I'm sure you're referring to it as. So let us know. But inflation will eventually end. Mario, is that
it depends how Vince defines inflation and deflation. To me, inflation is the increase in the supply of credit and fiat currency. Deflation is the decrease. And the last time I think we had deflation of the money supply and the currency, the credit and money supply, was in the 1930s. And in a fiat currency system, there will always be inflation, because governments and central banks, they can never help them. They can never stop helping themselves create more currency and debt out of thin air. So unless we go back on a sound money, gold, 100% gold backed, and let's say bimetallic silver 100% backed system, I don't see a deflation of the fiat currency at all. What maybe Vince is talking about is the economy shrinking, kind of a depression, or you could say a deflation of growth. But I think prices of the items that we need, just like we spoke about, all the commodities still going up and breaking really key technical levels. That's going to keep going because the currency is being issued and more. And it's just like a share issue. If IBM keeps issuing more and more shares, their stock price is going to go down. So that's the same thing. So I personally don't see deflation at all.
I see
anytime soon.
I see more of the stagflation narrative playing out, just because the economy is going to be compartmentalized into so many different facets, to where I can understand how, like we mentioned before air, the Steve Van Meters, the Kathy Woods, the deflationary camp saying that technology is going to be the reason why the environment around us, because of more technology companies now superseding the old legacy financials. Okay, cool. But anyway, we know that the currency creation must continue or else. So that in of itself, just from a supply and demand aspect, there's going to be way more supply than actual demand. And then you can never create the amount of goods and services that we actually need to meet or to even balance off the supply of currency that's coming in order to keep the thing from imploding.
I mean, Vince, you just have to look at, I guess you're in the US. Someone told me, made a comment the other day in my videos, the $50 bill is the new 20. 20 years ago, you could do quite a bit with $50. Today, not as much. That's so in the deflation, actually, the currency gains purchasing power. And I don't see that happening at all. I think, unfortunately, a lot of people get confused with the terms. And I look at inflation as a purely, in the classical sense, as a monetary phenomenon. Yes, prices of maybe some computers, some technology things will go down, but the money supply is still going up.
Right.
And even in the deflation of the money supply, you could have things that go up in price.
Right.
But even in IT, I mean, I've noticed Apple computers and iPhones, they haven't gone down in price in the last 10 years.
Right.
They're going up through the roof.
Right. Now so that's another thing. Like with the $50 bill example there, it's depending on what you're buying. So clearly, overall, $50 bill to buy is less. But then along with that, most people find ways to navigate, to maneuver around getting those same level of goods or services for just with different types of products or services. Like, for example, a $50 meal for two, taking your wife out on a date is still possible. It may not be at the restaurant of your choice, but it's still possible.
It's gonna be at like a fast food joint instead.
Right. You got a
nice French restaurant. Maybe you could share that article where Michael Snyder says he bought 2 prime rib steaks for, was it $84 or $64?
Yeah. So this so just talking about this article here, Michael Snyder from the Economic Collapse talks about basically in 2022 what we can expect more of, which has already been played out before now, is that just the PPI the producers and manufacturers of goods and services, they've already basically baked into the cake that they're going to be increasing their goods and services moving forward, just because it costs them more. So this article pretty much shine light on that. Go ahead.
And he said, just bought 2 prime ribeyes for $64. So instead of going to the restaurant where you have prime rib, you go to a restaurant where you have a burger, and you can spend $50. But if you go to a restaurant where you want to eat a nice steak, it's going to cost you, $150. But what was I going to say? I forgot now. Anyway.
No. So in this article here, he's just highlighting some examples of the manufacturers that already has been quoted as saying they're going to increase prices 6, 7, 10, 20. So that's baked into the cake already. And 2022 hasn't even kicked in yet. And they're already telling us expect higher prices when you go to the store to get your typical items.
That's what I wanted to touch upon, because a lot of the big corporations, they've been able to not pass the cost of producing, or the PPI. That's like in Germany has gone up 30%, in the US is going up by 10%. So the big corporations, they are able to, because they have a lot of resources to keep the prices down, but they can't do it forever. And I think that's what Michael Snyder is saying, that this year, the next year, 2022, they're going to have to start doing it, or else they're going to have to shrink the packages to nothing, while other kind of businesses in 2021, they didn't have this luxury of not passing on price increases, like smaller retailers and restaurants and other businesses. It's going to get worse, the rising prices, and it's just a consequence of all the inflation we've seen since Nixon closed the gold window, but especially since 2008, when they started doing QE. And people forget, we've had 0 interest rates basically since 2008. Yes, in 2016 to 2018, they tried to raise it. They went back up to 2%, but they had to, that created a disaster, and they had to come straight back down. So that's like 13 years with 0 interest rates is not normal. Of course, we're going to see rising prices, and we're seeing it on the consumer side.
Right. And it was all designed to keep the illusion of wealth going with, the overinflated asset prices.
Oh, yeah.
And that plays into, go ahead.
And that's why I get annoyed when people talk about, I'm not getting annoyed at you, Vince, but this deflation, all this talk of deflation is just like a distraction, so they can keep inflating, so they can keep the Wall Street, the hedge funds, and whole, because if they admit, oh yeah, there is inflation, they'll need to raise rates, and if they raise rates, the whole house of cards comes down, all the derivatives, all the stock market, bubble, and you have an article about the stock market that Warren Buffett favorite indicator is at 230% instead of 100.
Yep. So here's an article here that I had to mention just because it talks about 3 reasons why 2022 will be unforgettable, and then it talks about basically just a overvalued
Yeah,
price range of the equities market, and it talks about all the indicators that are already beyond
yeah, that's
warning
the
signs.
yeah.
And so it talks about the Warren Buffett indicator, is sitting at 213%. Buffett thinks over 120% is dangerous. We're at 213% right now.
Well,
S&P 5. Well, go ahead.
that's why I think actually, we could be in the crack up boom or runaway boom,
Yeah.
where even if the economy goes into a recession, you could see the stock market keep going up if the
Mhm.
Fed and the government come out with more stimulus,
Yeah.
and that's the hyperinflation. I think back in 2017, Venezuela was in the grips of hyperinflation,
Mhm.
and the Caracas stock market index was the best
Ooh.
performing.
In the world.
So I mean, I wouldn't put past this Buffett indicator getting even crazier.
Yeah. And the thing is that a majority of the economists and mainstream pundits are not really even talking about this in a negative sense. They're saying that this is good. It shows that the economy is healthy. And basically, this article is talking about that that's a lie. Expect a correction. And the author of this even talked about expecting this. What is that? Somewhere about 30, about more than 40 or 50%, up this upcoming, 40 to 60% drop. So they expect it to be worse than the dot-com bubble, somewhere between 40 to 60% of a correction this upcoming year. And that's just on the equity side. Then it talks about the inflation, how it's not going anywhere
Yeah,
just because sticker prices are going to continue to go up.
yeah,
They expect it to go up a lot higher this year. And then they talk about keeping an eye on gold. It's important to keep an eye on gold because more nations, more countries, more individuals are talking about gold now in a more favorable light amongst all the other distractions that they thrown our way. But there's 3 things they're talking about this year we should pay attention to.
yeah.
And then it also helps when this article here, when it talks about how central banks, a lot of the emerging markets have been running towards gold, dumping, their own currencies and especially the dollar for gold. So 2022 will be a good year for gold,
Yeah.
whether they anticipate it to be the same or not, but we will see.
And can you imagine though, if the stock market dropped by 40 or 60%,
Mm,
uh, what the Fed will come out with? I mean, they'll come out with another bazooka,
yeah.
and that's just going to put another rocket up the stock market. They never. I mean, in 2020, when the stock market dropped in March, it dropped almost 40% in like
Mhm.
weeks.
Yeah.
And they panicked and they cut rates to zero. Right now they can't really cut rates. Maybe they'll go negative and they'll go 200 trillion, 200 billion QE every month, or they'll start
Mm.
buying stocks, um,
Stocks. I would bet stocks because there's our Swiss Bank. There's already I think
yeah.
is the ECB in the stock game yet?
I
Have
think
they
corporate bonds, but
corporate bonds?
I
So
don't think. I think it's just the Swiss National Bank and the Japanese central bank.
Japanese.
They've bought ETFs.
Okay, so that will be the next thing I would expect before they go outright negative. Like
Yeah,
we're at a quarter of a point now. Okay, we attempted to get to half a point, we couldn't do it. The chance of them going down to negative 10 as like that's it. That to me that's end game because they've already shown they can increase, but if they continue to go down further, then there's no way of bringing that thing to life. But let's get to a couple of thoughts here. Vince Grant, appreciate you, man, says, when will housing crash, stock market crash? My theory is it will crash when the Fed raises rates. And with that rate hike will then come the dollar crash. If the dollar collapses, does not mean deflation kicks in. Whew,
can I
that's a
answer
loaded
that?
question. Yeah, go ahead. That's a loaded question
Well,
right there.
with the dollar collapse, it means you can buy. You're going to be able to buy very little with the dollar. That is not deflation. That's higher prices.
Mm-hmm.
Um, I don't think the Fed can afford to raise rates too much.
Yeah.
They might do a token 1 or 2 or 3 rate hikes, and yeah, but I agree with you because with Vince, because a lot of people think if the Fed hikes rates and everything collapses, that the dollar will be very strong. But the dollar is a debt instrument.
Mm-hmm.
Um,
But watch it.
And it's difficult to, even in a deflationary collapse, you would want gold, because if you do have a deflationary collapse, all the banks will fail. Corporate bonds are going to fail. Even the U.S. Treasury, they won't be able to pay the interest on the debt. The only way they'll do it is, like Greenspan said, we can just keep printing it. So I don't see the Fed. They'll try to make it seem like things are back to normal, but they're between a rock and a hard place. What do you say, Mike?
Right, and that's so. The thing comes to mind is how, in an environment where the housing crash, stock market crash, my first thought would be the rest of the world is already burning. Like, in a sense where currencies, people are fleeing their own currencies, and perhaps they're running to the dollar. And here's a question: like, will nations still run to dollar-denominated liabilities? Debt instruments in an environment.
I don't think so. And maybe one example for Vince about real estate is what happened in Lebanon. I interviewed a guy from Lebanon this year, and he said when you have a currency collapse, there is no, because if you have a currency collapse and the markets collapse, the bond markets collapse, the liquidity goes away, so you don't have any currency to use. So houses will not even, you won't even be able to buy or sell anything. So it's really difficult. That's what happens in a hyperinflation.
Right.
All the money that you have, you're going to try to use to buy things that you need to survive. And I think we might get that, but also at the same time, we could see commodities, as we spoke in the beginning of the live stream, go through the roof. It's the worst of both worlds.
Right. And that's the thing, like, at that moment, if that moment arrives, or when that moment arrives, it's the realization that, what we've always known as money is no longer the case. Because the fiat currency game will be up, because it's all debt based, it's all credit based. If it's not readily available, and that means your card may not, do what it usually do. The bank situation I'm talking about continuously, there may not be, your screen may say zero. There needs to be a complete, reset of everything. Because
people will start bartering at the beginning until something is conjured up, some kind of
an alternative. And I think that's where the people will have the best, that moment of time where people will be forced to utilize barter system, utilize precious metals, and depending on, other alternatives. I can see a use case for cryptocurrencies amongst people who believe in using it as a medium of exchange. If there's confidence in it.
Yeah, I've seen recently that India and Iran decided to barter, because Iran can't do any dollar transactions because of sanctions. So they owe, I think India owes 250 million to Iran. So the way they're going to pay them is to send them $5 million worth of tea every month.
Right.
So you see, you could do that on a personal basis.
Right. It either be country to country. That's what's going to be utilized. It might be mad chaos. And that's what I would hope for, mad chaos, rather than a structurally controlled event, the way that I think they want this thing to be rolled out, because then that plays into how the CBDCs is the obvious, solution that they'll try to throw out there. It'll be waiting for us, ready to go if they have their way. I'm hoping it doesn't happen that way, to where we go through a small period of, God forbid, the term, but a Mad Max style approach where people are forced to realize the shenanigans that's been pulled over our eyes for 100+ years. And then they're forced to think about their financial world as well as the political system in a whole new way, which would be good for us. And then jump to the next question real quick about, before I jump to the next question, the housing crash, stock market crash, that stuff is needed. I personally welcome that, because that's the best way for us to do away with this system that has been used against us. Like, they've been manipulating our skill, our labor, our time with this funny currency creation forever. And so what bothers me most, when people look at their house as their greatest asset, because that's what we've been told and taught, not realizing that, at some point along with that, your food must go up. Everything else that you need and consume as well must go up. So if you want your house to continue to go to the moon, what about your food prices? They're going to go together.
Now, I'll add another point about the house. Let's say I heard someone talking about how U.S. house the average house price has gone up 19%.
Mhm.
They and people think they've made 19% on their house, but they haven't. The
Mhm.
only way to cash in on that is to sell your house and then take the cash, the profit.
Right.
But if you sell your house to take the profit, you're going to have to buy another house, and that other house
It's
is
gonna cost
also
more.
going to buy 19.
Right.
So unless you have you are in the real estate business and you have several houses,
Mhm.
yes, a house it does keep maintain your wealth. But like you said, I think asset values, nominal values, are just not based on reality, and a crash of everything will rebalance things, and
Yeah.
it's not going to be, it's going to be painful, but
Yeah.
there's no way out.
It has to be. It's going to be painful. It has to be painful. The pain will also create the awakening moment for humanity.
Oh yeah,
So we'll realize. So
there will be a lot of opportunities as well.
exactly. So let's get another question here. Chris, it says, when the Fed gets boxed into a corner with inflation raging, they dare not raise rates, which will collapse the system. At that point, will the U.S. government step in and implement price controls, thus adding gas to an raging fire? So yeah, we touched on that a little bit earlier, but I think that's the narrative that they're going to float out there as a tool. I don't think they'll be able to execute that because the system is so complex now. You know, how will they pinpoint which sectors to focus on first? Will it be, you know, the food sector? Will it be energy sector? So they'll attempt to roll something out like that, but I don't think it'll work because I think we'll have more issues to deal with that they won't actually be able to get around to doing that, in my opinion.
Well, I think we're almost there, what Chris was describing there. But as we said, we looked, I don't know if Chris saw that article about this economics professor from the University of Massachusetts proposing price controls. That doesn't work. It makes things worse.
Yeah.
Because it creates even more shortages.
Right.
And like Mike said, people will just go to the black market and they'll pay more.
So here's another question or a thought here from Mr. LBP. It says, how do I take delivery on a water futures contract?
Well, I would go on the CME website and look at the contract description.
Yeah.
Because the water futures contract is on the CME, but you'd probably need a big tank.
Yeah, and the question is, where does that water? Where is that water?
I think it's from? It's from California. It's California water.
They're not going through some issues with water right now, aren't they? So
I know, but that's where the water futures on the CME is based on
Yeah.
Let's have a look there. Contract.
So
CME.
LBP trying to collect on his water. Good luck with that, man.
Oh yeah, it's the NASDAQ VELS California Water Index futures. Let me share that. Hold on.
All right. And for those that are tuning in, definitely hit the thumbs up button, show your support for the channel. Throw out some questions, some thoughts. We'll definitely love to discuss it because once again, we're all in this together, trying to navigate and narrate through this monetary and financial insanity.
There we go.
All right, let me add it.
So it's yeah. Let's click on contract specs so we can answer low blood pressures. Let's say if it's deliverable, because you see some of these contracts they're not even deliverable, which shows me that they're there just to manipulate the price. So I don't think there is even a deliverable. It says here settlement method, financially settled. So yeah, you wouldn't even be able to take delivery of that. So what it shows to me is that it's just you know, they're just trying to manipulate the price. It's just like with the gold and silver. And yes, a gold and silver on COMEX are deliverable, but it's rarely ever done. We've seen that Rafi Farber try to take delivery of one silver futures contract and he hasn't been able to do it. They make it difficult. So yeah, unfortunately, low blood pressure, you won't be able to take delivery of that.
Right. I think the invention of the futures market has been one of the greatest manipulation tools meant to create a profiting opportunity for the banks and the bullion, all those insiders. and distort the actual price of real world items to their benefit.
Oh yeah.
And just basically make it. They were never meant to actually be settled.
No, well, but actually, I agree with you partly because if you go back to the 19th century, the Chicago Board of Trade and the Chicago Mercantile Exchange, which is the CME, they were actually useful exchanges because in the Midwest, there's a lot of agriculture, and the farmers and producers, they could hedge because of droughts and price volatility. So there was a need for that.
Yeah.
But what I agree with you on is that these futures created by the bankers ever since the fall of Bretton Woods, it's just been there to manipulate the underlying asset. And a lot of times, like you said, there's nothing underlying those contracts.
Right. Here is another thought here from JK. It says, did anyone see the beast image at the UN building in New York? And so I pulled it up real quick. I did see that. Let me grab it. Well, where am I? Right here. Or add to stream. So yeah, here's that image they're referring to here, referring to the image that's depicted within the book of Revelations. And so it's just, once again, what purpose would that serve, as a statue at a building that's supposed to be I guess a world unifying government type of infrastructure, unless it's just too many resemblances to biblical matters here. So
yeah, I'll share another interesting thing with you. It's a snake in the Vatican. And people say, why would there be a snake in the Vatican? Let me share it with you guys. Share screen.
Yeah, I think that has to do with what the word pharmacia.
Yeah, look at this. This is like in Rome at the Vatican, in one of the places where they do the mass, and I mean, it's the head of the snake, isn't it?
Yeah. Wow. It's inside the building.
Yeah. I mean, it's amazing. I mean, I guess if you're in the building, you don't really notice, but if you're far away,
yeah.
I mean, look at these pictures. They're the Vatican guards, the Swiss guards.
Yeah.
I mean,
serpent. So clearly thought went into that design, because that's not by coincidence.
Yeah.
They wanted that to be created. So George said they brought it from the Denver airport. I'm assuming
I've seen the Denver airport murals, isn't it?
I haven't seen it. I haven't seen it at all.
Yeah.
All right, let's go through a couple more subjects real quick. We can't help but jump on this subject here. Where it go? Man, I'm everywhere. Erdogan calls on Turks to keep all savings in a lira. So I talked about this the other day, where they're basically asking for support. Your gold deposits, please, return them into the system. We'll give you interest on it. I want to say it's like at 3 point or some low percentage of interest in comparison to their inflation rate being closer to 20%. And I'm like, man, they coming out with anything.
I think their interest rates, base rate is like 15%.
Yeah.
But like you said, the inflation is over 20%. I mean, this is not going to work out when a politician asks the people to do something, especially with money. They know there's something wrong, that he's desperate.
Right.
I'll show a chart here of the Turkish lira, and I'll explain what's been happening. Let me share it again. I'm getting used to this.
And another thing with that gold, with them asking for gold deposits, it's basically their way of trying to reinstate confidence into the fiat system. And that lets you know how important gold is towards providing confidence.
So this is the dollar, how many Turkish lira the dollar buys. So you've seen that this year, it's gone from, you could buy about 8.5 Turkish lira. And then last week, the dollar went up to 18.5 Turkish lira. So it was collapsing the lira. So what Erdogan did, he issued overnight this directive saying that if you keep your deposits, your savings in the Turkish currency, what we will do is that we'll give you, if the Turkish lira drops versus the dollar, by more than the interest that you're getting, we'll compensate you for that. So he actually created a massive panic to to sell the dollar and buy the lira. So it's been working for the last 2 weeks. But as you notice here, it's almost like the lumber chart. It's starting to go back up. So I think Erdogan, he will be sleeping, won't be sleeping very well if we get back to around 18 and a half. Then it will show that his move last week to basically back up doesn't work. Right now it seems to be working, but I think it's going to be short-lived.
Right. But that's, once again, he's attempting to try to, keep confidence in the lira, as well as, keep his his citizens happy with him.
I mean, this is probably might even happen in the US or in Europe eventually, when gold and silver are going through the roof.
Yeah,
I'm sure the politicians are going to be saying, no, stop rushing to buy gold and silver, because what that will mean is that they're leaving their own currencies. It hasn't started here yet, but I think it will.
Yeah, in due time. Here's another thought here from Jesse. It says, Mike, after Biden's recent statements on this, whatever, do you or Mario expect any more lockdowns? Are the lockdowns in London now?
I'll tell you what's happening in the UK. They haven't even instituted lockdowns, but people are already doing it themselves because some people are so scared. For example, I sent a message to a friend today because I decided to go play golf. Do you want to play? And this guy he doesn't buy into this stuff, but he said, oh, I'm isolating because my wife and kids tested positive. So, and I don't even think they have to do lockdowns anymore, because people will lock themselves down without the government telling them. There was a town in the UK, I think last week, the mayor there decided to lock everything up, small town, and the people agreed. So I don't know what's going on in the US.
Yeah, so as of now, by Biden's statement of basically saying that there's nothing more that he can do at the federal level, it's up to the states. And when I heard that, I'm thinking like, okay, so what does that mean? How do I read into that? And then here in Michigan, Whitmer has decided to not go with the CDC and dropping that from 10 to 5 days of quarantine or whatnot. They're just, as of now, they're keeping it at 10. So there seems to be a disconnect among states. And then, of course, right now, cases, as we're being told, is at an all-time high. And so they're still pumping fear out there. But even the CDC is going against themselves, saying don't travel on cruise ships, because if you participated, you didn't, no matter what, you still could run test positive. Then they're also coming out and saying that the tests are not effective anymore, because anything could be, anything can show up, up to 12 weeks after you got tested. So it's like we're witnessing all the lies come apart at the seams, but yet because of the indoctrination has already occurred now, to where people no longer need to hear from the experts, because they now have become engrossed into the lies to where they believe it. So it's state by state, person by person.
I heard as well that in Quebec, the province of Quebec in Canada, that's where Montreal is, that they've imposed a curfew now from 10 p.m. to 6 a.m. or 5 a.m. And you're subject to $1,000 to $6,000 fine. And here in the UK as well, we have what they call the home nation. So we've got England, Wales, Scotland, and Northern Ireland. And with the exception of England, because the national parliament is in England, you've got the Welsh. They have some kind of local power. So do the Scots and the Northern Irish. So the Scotland and Wales, they are locked down for Christmas and New Year's, while England is open. So what we're seeing a lot of young people from Scotland and Wales coming to England, to London, to party for New Year's, which is strange.
Speaking of UK, I see somebody in the chat mention about the article I sent you about driving. It says UK inches closer to, what does it say here, to eliminating private car ownership.
I saw that. I think that's a little bit exaggerated. They might be experimenting that somewhere, but I don't see that happening. It could happen eventually, but it will take decades. I think people still like having their cars here.
Yeah, I just think that that's the fact that, you know, there's a government official willing to come out and saying that it's time to move forward and get rid of
Yeah,
that. Let's just know that she's obviously a part of the World Economic Forum's
yeah.
agreement of you'll own nothing, be happy with it. Whenever I see stuff like that, lets me know that okay, they're just receiving
Yes.
orders from somebody
The
else.
the thing is, for example, I think in the 1920s in the US and a lot of countries, you had a lot of in the big cities, in the middle of the city, you had a lot of cable cars, electric cable cars,
Mhm,
and that worked really well. The automobile, yes, it gives you independence, but is it really that bad that we might go back?
mhm,
You know, do we need to like? Yeah, I'm not saying I agree with that, but uh, I could see younger people move towards where they don't need a car, where
mhm.
they can, yeah,
Yeah, especially right now, most people, at the price of cars at this current moment, most people are not. You know, no one can really afford a car anyway. It's
yeah,
always, you know,
they
being able to
lease it,
finance it.
yeah,
But then again, if once the credit system goes through its, you know, hiccups, and I think, you know, all the, you know, G7 nations go through their you know, their come down a reality moment as far as not being able to finance their entire lifestyles
mm.
relatively as easy as it is now, then buying cars won't be a priority at that point.
For
Like
for
people.
example, like where my sister lives in Switzerland, up in the mountains.
Mhm,
Let's say if I go to Switzerland, I'll fly to Geneva. I'll take a train up from there, and it stops in front of her house
yeah.
almost. And over there, I guess you do need a car, but you can walk as well. So I don't think it's the end of the world, but I still think it's going to take a while to change people's mentality to do that.
Yeah.
And I'm not saying I agree with the Great Reset, by the way.
Yeah, and then I want to I'm going to share something real quick. I want to end on this one here if I can. Let me copy that. Let me see if I can show this. So I put something on the just to let you know how far we've come as far as I want to share this here real quick. Let me see where that. There we go. So I shared this in a little Telegram group there, but just to see how far we've come from the affordability and sustainability of life based upon, you know, one income. But look at the, you know, the average income there was about 9,400, but yet you know, house prices, you know, almost 3 times your annual salary. You know, you could have afforded a home. You know, a new car was, you know, a third of your yearly salary, give or take. And so just look at these figures here, man. I just thought this is a good way to close out the 2021, and that, you know, where we used to be and where things are heading, because these prices we'll never see again.
I know. So much for deflation, huh?
Right, for real. But as we get ready to close out, Mario, leave us, you know, any thoughts heading into the new year? Anything you want to leave us with?
Yeah, I think unfortunately, the powers that be are really desperate
Hmm.
uh, to get people medical procedure.
Right.
I don't know what really the agenda is, and but if you can, you know, try to, and it's not easy, of course, but try to ignore all the noise and yeah, and live as normally as you can.
Hmm.
And what else? Faith, like you talk about,
Yeah.
you know, that good will triumph over evil.
Yeah.
And unfortunately, I heard someone say that evil a lot of times is in charge because evil uses power and force, and good people
Mm,
don't.
right.
But maybe, there are. I don't know what's going to happen, but yeah, just try to stick to the truth and to what you believe is the right thing.
Right, right, and on my side, looking into the new year, you know, productivity over consumption. Like I realize at this point, especially after this past Christmas, every Christmas, I realize, you know, more like I get clothes. I mean, you know, get a lot of the same stuff I don't even use. So I'm like, you know, how can I,
Mm.
you know, basically consume less just because I have everything I need, relatively
Yeah.
speaking? How can I produce more? How can I reach more people? How can I add more value?
Oh
Because
yeah.
this is going to be a year of an abundant opportunity, depending on how you're looking to take advantage of it. So all this, you know, doom and gloom around us
Oh
is
yeah.
opportunity. So,
I mean, yeah, you always have to try to create some value, I think,
mhm,
like you said, you know, and that's what we try to do here.
yeah,
And sometimes it might sound that we're pessimistic, but we're realistic as well. But there are opportunities, I think.
Right, right. There's more opportunity now than I think it ever been than it ever has been in human history, just because we have so many tools at our fingertips with the
Yeah.
internet, computers,
Oh, yeah.
cameras, there's ways. And of course, I'm real big on, really encouraging people to tap into their unique areas of gifting. Like, everybody here is uniquely positioned to offer something
Yeah.
that would allow you to not necessarily be dependent upon one
Yeah.
source. You know what I'm
Yeah. And
saying?
don't be afraid to do what you love and what you
Mm,
like, and
right.
speak about it. And
Mhm.
yeah, don't think, oh, how will this other person think about, when I
Yeah.
started my YouTube channel, I thought about, like, oh, should I say that? But then I just said what I felt like saying,
Right.
and you just gotta do what you think is right for yourself.
Right. Just be yourself. Can't go wrong being yourself.
Yeah.
Some people
No,
hate it, but others will love it. But anyway, everybody, it's been great hanging out on the last live stream of 2021. Excited for 2022. Be blessed, be safe, enjoy, stay safe, and we'll see you in 2022. Peace.